Good day, I'm Chartered, your accounting tutor. In today's video and class, we are still continuing with financial statement of a sole trader, and we are looking at the format of statement of financial position. In the previous class, we were looking at the items that are used in statement of financial position. We are able to clarify all the items that are used in statement of financial position. Today, we are going to look at how the items are being arranged in terms of the format, how they are presented in statement of financial position. So, these items are presented strictly based on what is called the accounting equation. And the accounting equation is assets is equals to equity, which we are referred to as capital, plus liabilities. So based on the format, you first look at your assets, which what we call the total assets, which you have the non-current and the current assets. They look at the equity, and then you add liabilities, and the account, the two sides must be what? Equal. Then look at the format here. The format, you present it. First, you put the name of the organization of the sole proprietor is there. Put the name on the top first. That is, the name should come first. The name of the owner of the business should be put on top. After the name, then you now put clear statement of financial position as at the given date, which is mostly at the end of a year, like in this case, 31st December 2025. Next, you arrange your format. First, you are talking of the cost, you're talking of the accumulated depreciation, you're talking of the written down value, which can also call it the net book value, the written down value or the net book value. Then, you start with the assets. And the assets, first, you look at what is called the non-current assets. Non-current assets here are mostly what we call the tangible assets. Tangible assets. Assets that can be touched, can be seen, can be felt are called non-current assets, which are tangible in nature. For example, we have buildings. So you must put them under the respective head. The building, the initial cost, what is called the historical cost of the building, we put on the first naira sign. Mind you, we have 3 naira signs. All these naira signs are used accordingly. You must maintain that's why it's called the format, meaning you must respect the arrangement or follow the arrangement as they are based on the figures, what you're going to put in what naira sign or another. So here, the cost of the building will be here. Here we have what is called the accumulated depreciation. If there's depreciation, both the previous or the current, you can put it here. Then the bracket is saying that what you have here is being subtracted from the cost to get what is called the written down value. Another one, furniture, which is also a non-current asset. You take the cost of the furniture you put first, you break its depreciation if there's any, both accumulated and the current you want put together. If only the current, you can say put. If there's nothing, it means this will be dashed. Then when you subtract the depreciation, both the current and the accumulated from the cost of the furniture, you now get what is called the written down value or the net book value. Then mind you, after getting this, you close. Look at it. Anytime you see 2 lines accounting means close. You close the total cost of the non-current assets. If they're up to 5, 6, 7, even up to 10, just add them all and get the total and close it neatly. The same thing to the cost, the total depreciation. You are going to add all the depreciation together and get one value. Then you also add the written down value and then also get the value. But mind you, the format is clear that you must close the cost here. You also close the accumulated depreciation and then you leave the other one open. Please don't close the last one because this is what is going to link the up to down. It's going to link the non-current assets with the other current assets and the rest. So, but you must close this and this, but you leave that one open. Next, we have what's called the goodwill. The goodwill, mind you, in the other lesson, I told you that goodwill is an intangible asset. Though it is grouped under non-current assets, based on international financial reporting standard. But the difference is that goodwill is not tangible. So you always bring the tangible assets first, which are capable to depreciate, and then you bring the intangible assets, but that is still under the non-current assets, and you now bring it out. And look at goodwill here. You can have things like investment, franchise, copyright, trademark are all examples of intangible assets, which they come immediately after you have your non-current assets, but they are all grouped as non-current assets. As you can see, there's no official heading here again. But hitherto, we have what is called non-current assets and intangible assets. But now, all is under the non-current assets. Then you put the value here. If there are others, you also arrange it here. Then you transfer the total. But here is only single intangible assets. Then you take it direct where it is under the written down value. Next, you go to the current assets. Current assets come after the non-current assets. Mind you, all these headings must be underlined. This is what learners find it difficult. The headings are very, very, very important. After non-current assets, you get the current assets. Under current assets, we have things like inventory. Mind you, look at the arrangement. It is under the middle naira sign. So that when you sum, you transfer it to meet the order values in the last naira sign so that you can sum it up. We have inventory, we have account receivable, all arranged in the second naira sign. When you sum this up, the total should be transferred to the last naira sign so that you can sum it up. As you can see, add, then you add the non-current assets with the intangible assets to the current assets. Then you get what is called in accounting the total assets. And all this, look at, when you have the current assets add together, the total here is referred to as the total current assets. Then the total of the non-current assets, intangible assets, the non-current assets, the intangible assets, and the current assets will give what is called the total asset. Mind you, you must close this. This must be closed up. Very, very important to end the first segment of the financial position, which is called assets, means the total assets. Then the first segment is over. Then I say equal to means we are now going to the second segment of the statement of financial position. This, if it is examination, take it that this is the page of your answer booklet and it's over. Please, going to the next page, don't draw another heading or don't create another heading. The next thing is just control the page with 3 naira sign so that you can have a flow to follow the format. And that is why this is the continuation of this. And don't give a gap. There's no gap. You don't give a break between this and this. This is just a normal space. This, if there is no spacing, there should be a perfect continuation from here. Because most learners feel that this end, if we give a double gap, it simply means that you are separate the older segment with the other one, which is not correct. It is a perfect continuation. So we are continuing from here. So the next heading is equity and what? Liabilities. We are still moving with the 3 naira sign without creating another heading. Then we start with equity. When we talk of equity, these are the items under what is called capital. Then we start with capital. Capital is arranged in the last naira sign. Then you have your net profit or loss. If it's net profit, you come after capital. If it's loss, mind you must put it in blanket because you are going to deduct. You are going to reduce the owner's capital. Then next, if there's additional capital, you bring it, or what's called extra capital, you bring it, and then you also add it, as you can see. Any figure without blanket accounting simply means you have to add it up to the other one above. Then from here we have drawings. That is what is taken out by the owner. As you can see, drawings is a deduction, then you put it in bracket. So when you sum the capital, the net profit, the additional capital, then you subtract drawing. In accounting, what you have is what is called the closing capital. What is called the closing capital. This is the capital that the owner have, or the equity that the owner have at the end of the year. The next, it means you have finished what is called the equity. Then you finally go to the liabilities. Here, under liabilities, they are also grouped into two, just like the assets. You always got the non-current liabilities. The first non-current liabilities is what you have, what we call the load. The load. Here you take it in the middle naira sign, or you want to get the total of liabilities. Then you go to what is called the current assets. Under current assets, you always call account payable. Still arrange it in the middle naira sign so that all you add and get what is called the total liabilities. Then you also always call bank overdraft. It's also an example of current what? Liability. Sorry, there is a mix-up here which I want to clarify quickly. This is not current assets, but current liabilities. Sorry for the mix-up. This is current liabilities. Sorry for the mix-up. Then here, the heading is current liabilities, not assets, as initially was. So in this case, under current liabilities, we have accounts payable, which you arrange in the middle naira side. We have bank overdraft, which you arrange in the middle naira side. Then next, you sum this up. That is, you now add the non-current liabilities with the current liabilities to get what is called the total word. This is what is called the total word liabilities. This is, you bring it here and say this is what is called the total liabilities. Total liabilities. Total liabilities. So getting your total liabilities, you now transfer it to the other side to meet the closing capital. Then capital, which is referred to as equity, plus the total liabilities, give you what is called the total equity and what? Liabilities. So if all things being equal, if the arrangement and the figures are clear, with everything being arranged the way it's supposed to be, you now get your accounting equation right, which says total assets is equal to equity plus equity means they must be equal. Therefore, the financial position will go ahead and what? Balance. And this is where most lenders find it difficult to balance the financial position because the arrangement is an issue, and some we have a challenge of putting the figures the way they're supposed to be, either to add or subtract. There will be a mix-up, but if you follow this format and continue the way I'm trying to explain, there will be no issue at all. In today, we have concluded the format of statement of financial position. We also finished in the other previous class the format of trading profit or loss account. Mind you, the next class we'll be looking at how to solve a complex question or a complete question. But before we do that, we are going to look at adjustments. Mind you, adjustment to the accounts are the most challenging aspect of accounting. Where adjustments are given, you must adjust, you must make what is called amendment to the initial items given in the trial balance. Then, before you prepare a complete financial statement, an adjustment is one of the areas that most lenders find it very difficult to handle. What you call accruals, what you call provision for bad debt, what you call depreciation, and many others are so challenging. So if you are able to understand adjustment, you don't have much issue, which is the most challenging aspect of accounting. So I am calling on you to always follow my class, because in the next class, we'll be looking at the adjustment one after the another, how they are explained, how they are treated via the financial statement. And if you follow up, you have any challenge, you have to come back and ask. I will address it the way it's supposed to be. And all these things and both the format, the adjustment, and everything are detailed in this book called Financial Accounting, Easy to Study Model. Don't forget that you have to pick the book, because all what I'm trying to explain here, they are also well explained and breaking down to the lowest ebb in the book for you to be able to understand. But the book cannot speak to you the way I'm speaking to you, and the book cannot answer your questions. That's why you have to endeavor to follow my video and my class, so that I will come back to explain if there's any problem that you have in accounting. Please don't forget to like my video, comment, share, so that most learners that are having issues in what I'm addressing, they will come back to know. Thank you. I'm Chata, your accounting tutor.